Today's trading in U.S. markets signals that a seasonal sell-off appears to be starting. Taking a look at the S&P 500 in particular, we've been watching a head and shoulders top form in the S&P over the last few weeks. We had a double bottom back in January and February, explosive rally upward, and now we've seen it rolling over. So we had the left shoulder the end of March, the head at the middle of April, and the right shoulder in early May. We've quietly been declining, and today we've got it starting to break down, taking out this rising neckline here. This is a textbook head and shoulders top formation, and this is also being confirmed by the RSI indicator. We've seen the RSI fall under 50. First time it bounced back above, second time it failed, and now it's turned down again. This is a confirmation that momentum is turning downward. What's sparking this seasonal sell-off is we've seen the decisive shift in Fed thinking towards a June interest rate hike. We had the Fed minutes earlier this week saying that a number of members, the majority, favor a June rate hike unless something really went awry. Now we've got the Richmond Fed President Lacker coming in talking very hawkishly, still talking towards 3 or 4 hikes this year. That might be a little much, but at the same time, it's important to note that people are thinking that way. We also had today New York Fed President Dudley said he thinks that June is a live meeting for a rate hike, and he's one of the doves. Fed Vice Chair Fisher was fairly neutral as well, which is basically on that one we think silence means consent. So he certainly didn't oppose a rate hike either, and we're seeing that sort itself out here in the markets in terms of this little liquidity party we've had coming to an end and markets going back to normal. Now, long-term, strong U.S. economy can still support the market, but for now it looks like we're into a seasonal correction. It's not unusual for the markets to sell off in May and June, bounce in July, and sell off between mid-August and mid-October. That's all just part of seasonal fluctuations in the marketplace, and we're seeing that it looks like it's getting underway here in earnest. So we completed a 23% retracement of the February to April rally. We've broken that at the same time we've completed this head and shoulders top. That was at 2040. We're retesting 2040 as new resistance, and it's failing. And I'll just show that briefly here in a second on the 1-minute chart. There we go. This was 2040 up here. It's sold off. We've had a couple of pulses upward, but it has not regained it, which means that we are seeing this being confirmed. Now, next support, 2010. Here is about 2009, the 200-day moving average. And look down here, 1995 to 2000, round number Fibonacci test, 38% retracement of the rally. So that's certainly a point where we could see it pull back towards in a seasonal downswing. Also today, confirming the S&P, we have the US 30 also completing a head and shoulders top and starting to work its way downward as well. And it's important when we look at U.S. markets that they do confirm each other and that they show they're in gear. That when we see two markets completing the same kind of pattern, it's even more powerful. And in this case, in the case of the U.S. 30, we broke 17.5 and look, came back above it, retested it, and the bottom has fallen out since. It's now back down towards this 17.350, 17.400 area. Looking at the bigger chart here, we can see same sort of thing, double bottom, huge rally up mid-February to mid-April, 23% retracement completed and retested, and that's looking quite bearish down here. Similar on the RSI, breakout, one breakdown failed, second had a successful retest, and it's turning downward pressure increasing, and in this case here we could see it come back into this 17,100 to 120 area with the 200-day moving average, the 38% retracement, and a retest of 17,000 round number can't be ruled out either. So in the short term, it looks as though we are getting into a phase where we could see some seasonal sell-offs in U.S. markets.